Why China ban on critical minerals exports could be a great thing for the United States. Next on the Energy News Beat weekly recap stand-up.
The current state of critical minerals in the United States market, thanks to China's rationing about last week, it is a huge issue. So I wrote this story on an era defined by the push towards clean energy, electrification, and advanced technologies. Critical minerals have emerged as the backbone of modern manufacturing. And unfortunately, China has most of the control thanks to the Republicans and Democrats in the U.S. over the last 30 years. China leads critical mineral production. Michael, they got about 80% to 90%, depending on how you want to look at it. And why I put this in here, look at this chart. I've got lithium, EV batteries. Australia's 50%, Chile's 30%, and China's 10% for mining. But you look at how they're being produced, it goes over to China. Cobalt, battery, you take a look at Australia, Indonesia, and the DRC. China is 70% of the refining of cobalt. China, 35 to 40% of nickel. I did not know that. Indonesia, Philippines, and Russia make up 65, 75% of it, basically in the nickel refining and mining. Take a look at graphite. China is 90%, dude. 90% of graphite. You ask, what is important other than number 2 pencils? Everything. Graphite goes into a lot of electronics.
Yeah, so I want to dive into this a little bit because I think there's a little bit of a misnomer. As you mentioned, we're talking about refining capacity. Refining is different than the actual physical mining. There's actually not as much mining activity in China as you would expect. So this idea that China has all of these rare earth metals, or in our case, critical minerals, is actually not true. What they have is the refining capacity. Now, that's critical, but why? The question is, why did it all end up in China? Refining minerals is not that hard. It's not like creating a semiconductor that it's some super complex task. There's one reason why it all ended up in China. The answer is pollution, because this is an extremely pollutive industry to have. And so the only country that was willing to take it was China. Again, they were forward thinking, and part of this report is a big reason why the stock market tumbled. This 100% tariff that Trump dropped on Friday is one of the big reasons why I think this is super important. Now, I want to say something here that I actually think China. Because China then, what did they do in terms of the tariff war? Well, they said, okay, if you're going to put 100% tariffs on us, we're now going to go ahead and restrict the export of refined metals to the United States. So
you have it backwards. They did that first.
Okay, well, but regardless, whether they did it first, whether they did it, here's why I think it's going to come back to bite them in the rear, much like the U.S. semiconductor export bans to China will come back to bite us in the Bahootie. I think there's two things. So one, when you are forced not to have something that you need, what do? You innovate. You figure out how to replace it. Let's look at what's actually happening right now in the U.S. semiconductor space. NVIDIA and AMD are not allowed to send their best chips, even the worst chips. They're only allowed to send a finite amount to China. So what is China doing? They are going to begin creating their own semiconductor industry. And I guarantee you in 10 years, guess what? They're going to have chips that are far more advanced with us. Why? Because our policies at home force them to innovate. If I was China, I would understand this and say, why restrict minerals? You want the refining capacity. You want to be the bottleneck when it comes to refining critical minerals, because then you can use that as leverage when you need it down the road, when you attempt to go to war with Taiwan, when you attempt to do all of these things. I think the fact that they're putting these controls on the exporting of these refined metals, I think is going to eventually stab them in the back, because what's going to happen is that refining capacity is going to onshore here to the United States. We're going to find other places in Southeast Asia that will be willing to stand up a refining capacity. So I actually think this ban on exporting critical minerals, or really refined metals, is going to backfire on them. And I think the case study is what we're seeing right now with the NVIDIA and AMD chip ban that's going to China.
I agree. And it's a little more than that. Also, you've described it, but it's also taking a look at South America and Africa. China is playing a really political heavy hand to try to shut us down. They think they have all the cards, but I think Trump is going to get pulled that over. I included this one because David Blackman had a really good point. The mine from Christopher Messina talked about Greenland. There, you bring up a great point, Michael. That is, there's going to be other areas that we can look at, and Greenland is a great source. So maybe Greenland and Canada are going to fight to become the 52nd state, 51st and 52nd state. Who wants to be the winner there? But when you take a look at that, there are rare earth minerals all over the place, and you are right. Who's going to be, where do you want to put it? It's all in the regulations and the EPA's hands, because it's going to be the lawsuits and all the anti-climate folks and everybody else doing the lawsuits.
Well, it's going to end up being like what we see with what's going on with data centers right now. Everybody wants data centers. Everybody wants AIs, but then people try to spin up a data center in your backyard and everyone says, no, 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 no. And to be honest, I'm kind of with them. You're going to have electrical prices increase. There's a lot of pollution that goes along with some of these massive hyperscale data centers. So that's, I think, the issue that we're going to run into the United States is nobody wants to live next to one of these facilities. So where do we put them? I don't think Canada is going to take them. I think that's off the table. I'll be interested if Greenland takes them. I think the problem is, Greenland with their, really under the control of the EU. I don't think the EU is going to do it. I think our best bet is either to find places here in the United States, or I think what you'll see is a migration down to Southeast Asia, sort of like what happened with low wage labor, all went to China in the early 2000s. And then when China started increasing their labor costs because they ended up becoming high skilled, they went from low skilled, cheap labor to high skilled, low wage, all of that. And then the wages follow the high skilled, everything moved to Southeast Asia. I think that's what's going to happen here.
You bet. China and Iran seal oil for infrastructure in a deal to bypass U.S. sanctions. The great Irina Slav has always said sanctions don't work as intended. In a bold move to escalate geopolitical tensions, China and Iran have formalized a significant oil for infrastructure agreement. You got to love a good bartering system there, Michael. The deal not only secures a steady oil supply for Beijing, but bolsters Tehran's infrastructure amid ongoing economic pressures from Washington. Hey, Iranians, if you're listening, make sure you check any of their grid equipment that they put in that they can't remotely shut down, because that's going to be pretty much what they put in. They're going to put in anything that they own you. So under the new framework, Iran gets the exchange for Chinese contractors developing key infrastructure and rail lines, ports, industrial facilities. Settlements occur via non-dollar channel, Michael.
Ding! That's the scariest part. And I was about to point that out. Settlement occurs in non-dollar channels. I mean, this is the same thing that China's been doing with their Belt and Road Initiative for years now. These loan-to-own programs where they'll loan you a bunch of money, loan you a bunch of stuff, and then now we're all of a sudden going to end up owning you. In this case, we're going to own the oil flows. If I were Iran, I think this is a bad deal for Iran. Iran needs to be, if, again, I don't want to pretend I'm the Ayatollah, and that's not necessarily, I don't need to be giving advice to that guy. But if I was in charge of a country, I wouldn't necessarily want to give away my biggest resource, my most profitable resource in exchange for goods and services. I would prefer to get some sort of cash, whether it's via non-dollar channels, whether it's dollars, whether it's gold, whether it's whatever, and then use that and shop my infrastructure around. And maybe I end up going with China, but I can use more of a competitive market. I don't necessarily like this from a strategic standpoint. It is going to be interesting. And yeah, check all that stuff. There's going to be listening devices everywhere.
Yep. And then they're going to shut them down. Texas oil driller taps Trump's team to save California crude project. The same one that we were talking about, the Sable one. Houston-based Sable Offshore Corp is turning to the Trump administration National Energy Dominance Council for help in reviving a stalled offshore oil project in Santa Barbara. For our podcast listeners, this is very critical. I'm reached out to Jim Flores to make sure to see if I can get him on the podcast, Michael. But this is critical because he's going to federal. This is federal, and there's a pipeline that can tie into the main artery in California. Right now, that main artery for oil transportation in California is losing, Michael, are you ready? $2 million a month is what it's losing. That cannot stay open. Now, Hair Gel Newsom has already put out that he is going to allow Kern County, and he's going to put about 2,000 new drilling permits, which are going to get slow walked by the death's deep state in California. So it's going to be slow walked and not done. They're not going to have the volume that they need. It is a real problem. I think Gavin Newsom may have done a real number on California's oil and gas industry.
Well, I mean, he absolutely did. There's no question about that. I think it's smart for Sable to appeal to the Trump administration. The question is there what legal action then comes around? Because we live in a federalized democracy where states do have rights. So if a state decides they don't want oil and gas production, as dumb as I think that is, the real question is, what's the Supreme Court going to say? That's where I think it gets interesting.
It is going to get dicey, and here's why. Because the Chevron refinery is going to be starved, and they're going to be bringing that one back online. That's 40% of the jet fuel in the military bases for California. So as soon as Trump can't defend the United States, you're going to see federal involvement dropping in.
Yeah, no, absolutely. Well, Baytex Energy, they're actually a majority Canadian oil producer, entered the Bakken Shale in 2018. They've reportedly put their U.S. Eagle Ford assets up to sale for up to $3 billion. This was actually first reported by Bloomberg, actually had Baytex shares up about 4%, which kind of can tell you what the street thinks about this. They actually, I lied, these specific assets, which are part of a slightly larger Eagle Ford position, which they started gathering in 2018, was actually the bulk of it was through Ranger Oil Corporation, which was a purchase they did in 2023. And what's funny is they actually bought Ranger for $3.4 billion, or about, really that's Canadian, so $2.5 billion USD at the same time. So not maybe the greatest accretive transaction that everybody talks about. Oh, we're going to, every one of these mergers, Stu, it's all accretive. Trust me, it's all accretive. We're doing it right. Maybe not. Pretty interesting here. The report goes on to show, Bloomberg says that Baytex is working with advisors to gauge interest, and there are multiple entities looking to purchase this. My guess is you're going to see some private equity companies step in. I wouldn't be surprised if Kimmeridge Texas Gas, who just rechanged their name to something stupid. I don't know what it is, but Kimmeridge Texas Gas just rebranded into something stupid. I don't know what it is. My guess is they're looking heavily at this, considering their position in the Eagle Ford, but it's going to be interesting. As always, guys, the news and analysis you just heard is brought to you by world's greatest website, www.energynewsbeat.com. Stu and the team do a tremendous job making sure that website stays up to speed, everything you need to know to be at the tip of the spear when it comes to the energy and the oil and gas business. Go ahead and hit the links in the description below for all links to the timestamps, links to the articles, and specifically subscribe to the show on YouTube, subscribe to the show on Apple iTunes, give us a follow there, subscribe to our show on Spotify, please leave comments there, and subscribe to our Substack, theenergynewsbeat.substack.com. That's probably the best place to support the show. Stu does a great job of releasing, 2 to 3 articles a week that really encompass the big themes that are going on. We also drop all of our podcasts there, which give a little bit of a breakdown. We just had a great podcast. So I highly recommend everybody subscribe to our Substack, theenergynewsbeat.substack.com. We'd also like to thank friends of the show, Reese Energy Consulting, for supporting the show, guys. Reese Energy Consulting is the foremost midstream expert, guys. If you at all are dealing with issues in the midstream space, whether you're an upstream company and need help with first purchaser's contract or renegotiating your gas contracts or figuring out where you're going to tie in your next pad because you've got multiple different options and you're trying to break it all down, Reese Energy Consulting can help. If you're in the midstream space, I need an extra pair of hands, need some permitting or regulation help, or need some red team analysis on a final investment decision, guys, they have the team that can help you. Check out ReeseEnergyConsulting.com. They have clients everywhere and all throughout the country, from two people in a garage all the way up to the largestly publicly traded companies in the world. So if you're wondering, are you a good fit for them? The answer is yes. ReesEnergyConsulting.com. And finally, guys, investin oil.energynewsbeat.com. We are coming up on the end of the year, and I promise you guys, you do not want to be paying money to Uncle Sam. You want to keep as much money in your pocket. You want to diversify your portfolio a little bit, and you want to get some dividends. You can do that by investing in oil and gas. Check out investinoil.energynewsbeat.com. Fill out our portfolio survey and our tax calculator. And guess what, you guys are going to get a nice ebook that tells you here's what you should look for when you invest in oil and gas, and also figure out what your tax burden is and figure out how much you might save relative to your tax burden if you did invest in oil and gas, guys. We practice what we preach here, guys. We do this stuff ourselves. Investinoil.energynewsbeat.com. Don't give your money to Uncle Sam. Figure out and find out if oil and gas investing is for you. Depending on if you qualify, we will, again, send you all that information, and we may or may not point you in the right direction. Again, investinoil.energynewsbeat.com. Where's the glut? Says ConocoPhillips CEO Ryan Lance. This is a really interesting article. Ryan Lance recently sort of came out and has kind of challenged the prevailing narratives of what people are really calling this impending oil surplus. He was at an event, and really what he did, and I'll kind of read straight from the article here, speaking at a recent industry event, Lance questioned the notion of a glut, emphasizing that global oil demand continues to grow steadily. He argued that the market is tighter than current sentiment suggests, pointing out that the key challenge lies in sourcing conventional oil supplies in the coming years. He was also optimistic that oil prices could rebound to the 70, 75 per barrel range as, quote unquote, the market rebalances from any short-term supplies. These comments were actually made about 2 days ago, which sort of is in opposition of a lot of the sentiment that's out there right now. I mean, you specifically talk about things that have happened both at the IEA and internally. So think about the IEA has anticipated that world oil supply will rise by about 3 million barrels per day to 106.1 million barrels per day in 2025, leading to a, quote, huge oversupply that is causing, theoretically, these prices to fall as where we stand today. We've also seen JP Morgan Research, who I tend to kind of, I don't want to say follow blindly, but they tend to be kind of the most accurate and I think the most pared back. Obviously, we're not a Goldman Sachs company here, but JP Morgan Research forecasts Brent crude to average about $66 per barrel in 2025, which drops to 58 in 2026, mainly driven again by the supply-demand imbalances and trade frictions. You know, we've seen OPEC has continued to maintain this bullish stance. They've kind of doubled down on their expectations of strong oil demand. And I mean, again, I think that we're seeing that, you know, what you see out of OPEC is they want to say demand is strong so they can continue to raise oil production without severely impacting prices. And we've also seen the EIA, which is the U.S. Energy Information Administration, has sort of aligned with what the IEA is saying. They are forecasting global liquid fuels production to increase by 2.7 million barrels, so a little less than that 3 billion barrels. And they've put U.S. crude production to average about 3.5 million barrels per day. You know, we have seen steady production, refinery demand, which there is strength to bite these gluts. You know, on a long-term view, I mean, what Ryan Lance is doing is, you have to put this into context. He just laid off 25% of his workforce because they overspent on some acquisitions. They didn't control cost as much. So the real question is, why is he coming out and saying this? Who's he talking to? Who's his audience? His audience isn't the analysts that are covering his stock. They're not going to listen to this, but, oh, well, Ryan Lance thinks oil is going to be $70 to $75. What he's trying to do, in my opinion, is he's trying to signal to his employees that we have a bullish view in the future, and this 25% layoff is done. You don't need to walk around the hall scared that we're going to come out and do another 10%. You don't need to worry about all this. We are still bullish on oil and gas, and it's more of a signal to his company that, hey, we're still going to keep at this. We're not just going to pack it in and go home. And obviously, no one just wants to pack it in and go home, but I think he's dealing with a very nervous company base who just saw 25% of their friends go home and are wondering, are we next? And I think for now, the answer is no. Now, do I think $70 to $75 per barrel in the next 18 months is legitimate? That's the top side, in my opinion. I think, you know, I think what he's saying is correct on some levels. The market is not in a huge surplus like what the IEA says. I think again the answer usually always when you sort of plot on a scatter plot all of these different theses, you've got where the IEA and EIA are, you've got where oil companies are. It probably lands somewhere in the middle. So Ryan Lance, he's a big believer in oil prices at 70 to 75. But and so in sort of contrast to the first segment there, Vicky Hollub was basically wasn't at the same conference, was at the Energy Intelligence Forum, which is held in London each week or each year. She had a pretty sobering outlook on the oil and gas business relative to where pricing is going to go. She basically said that there's a range that she sees of 58 to 62 through the end of 2026. She described that range as tight, even amid persistent supply constraints and what are sort of they're saying is balanced demand. It's pretty interesting that she would come out and say this. I think, to be honest, she's probably making the opposite virtue signal. I think that Occidental has yet to really gone through a big wave of layoffs. They're one of the few what we would call larger cap companies. We've seen Exxon, Chevron, and ConocoPhillips attempt to theoretically right size their business. And so now the funny part is Oxy, who's kind of in that tier 2 range when it comes to large cap companies, they're probably next on the list. I mean, their acquisition of Crown Quest in 2023, by all accounts, is going fairly poorly. They've kind of loaded themselves up with debt and maybe acquired some locations that aren't maybe necessarily panning out. So I think it's interesting that she's coming out and now trying to put a bearish spin on this, probably trying to prep her employees for a potential layoff, whether it's large, small, anywhere in between, and her forecast really sort of aligns with what we talked about in the last segment, the IEA and the EIA relative to where it's going. Now, I think the interesting part is, okay, what does that mean for natural gas? Because she also touched on natural gas. She's a big believer in the AI boom. She continues to believe that dry gas production will continue to increase, and her comments specifically on natural gas has specifically, again, to do with AI data centers and electrifications, the forecast that they are seeing internally on top of what's also being spoken about externally is that, you could see data center could account for 10% of electricity by 2030. And you've got hyperscalers like Google and Amazon continuing to ramp up gas-fired generation to meet the demand. So I think what she's signaling, ironically, is that yes, we're heavy into oil, but if we are to make a move, we are interested in moving into natural gas. And I think if you're an investor and you're looking to, well, where do I sort of begin to allocate my money? I think you have to take a hard look at natural gas and say, okay, is there some natural gas players out there that is worth allocating to? I think there's a few, and we would highly, again, recommend doing your research. We're not an investment company here, but kind of the tale of two cities over here. You've got Ryan Lance on one end and Vicky Hollub on another. Who would have thought I would agree with Vicky Hollub? That's the funny part. I agree with Vicky Hollub, not Ryan Lance. It's, we will write this down in history. October 15th, 2025. Michael Tanner agrees with Vicky Hollub.